Welcome, dear traders. It's me, Kate Stichina, and you are watching a recap of the Asian session. On a Monday, almost all trading floors were closed on the occasion of the Christmas holidays. Therefore, the Asian session, which usually picks up trends set by the Wall Street, and was rather sluggish. Stock markets were up mostly because of news from China and Japan. The last trading week of 2022 has kicked off. It's quite a good moment for the Santa Claus rally to start. Investors still hope for a jump in shares before the end of the year. In December, there was a massive sell-off due to fears of a looming recession caused by the Fed's rate hikes. At the same time, the United States will unveil plenty of economic reports this week, namely the House Price Index, regional PMI indices, unemployment data, etc. Fresh reports may significantly change the market sentiment, triggering either a sharp fall or a rise. Positive news from China supported stocks, and the country will stop requiring inbound travelers to go into quarantine starting from January 8, the National Health Commission said on Monday. China has recently significantly eased restrictions for local residents. And this new step is another signal that the world's second-largest economy will reopen soon. As a result, it will move to recovery after months of strict lockdowns. Risk appetite improved amid such news, facilitating a rise in commodity currencies. As China reopens the economy, demand for commodities from Australia may also grow. This is why oil prices have climbed. These factors are bearish for the US dollar. It dropped sharply versus its rivals in the morning, hitting the support level of 103.80. The greenback has been extending its losing streak that began last week after the release of the PCE price index. The gauge was up 4.7%, a step down from a 5% gain in October. US Treasury yields, which usually bolster the growth of the US dollar, are also falling. Moreover, the 10-year government bond yield has already lost about 16% over the year. It may notch the worst annual performance on record. The US dollar made an attempt to rebound in the Asian session, moving to the intraday resistance level of 104.20. However, it failed. The index approached 103.90, remaining in the negative territory. The yen also lost its appeal with the investors. It's lacking drivers for further growth. The Bank of Japan will hardly provide new ones. The dollar-yen pair has been declining for a while, following the Bank of Japan's hawkish move. However, yesterday, Haruhiko Kuroda tried to dispel rumors about policy reversal. He said that the decision to widen the yield range was absolutely not a first step towards an exit from the ultra-loose monetary policy. This is why the regulator will hardly change its stance until April 2023. It means that uncertainty over the Bank of Japan's next steps will persist. It will be extremely hard for the yen to rise amid such conditions. Nevertheless, it's likely to retain a bullish bias for some time, especially amid the weakening dollar. In the Asian session, the dollar-yen pair was quite volatile, trading in the range of 132.60 and 133.20. The yen is still stronger than the greenback. The price reached 132.90. However, the main outlook for the pair is bearish. The Australian dollar was hovering slightly above its previous close at 0.6729. Commodity currencies advanced thanks to the possible reopening of China's economy and the rise in oil prices. The stock markets of Australia and New Zealand are closed today, so the Aussie was trading sluggishly. The AUD USD pair climbed to 0.6723, extending its winning streak. The pair advanced amid cautious optimism and expectations of a policy reversal by the Fed next year. In the Asian session, the pair was mainly trading in the upward range of 0.6723 and 0.6778. New Zealand is a major trading partner of China. Its currency is often seen as a liquid proxy for the yuan, so the kiwi climbed amid positive news from China. The NZD USD pair jumped to 0.6310 in the Asian session. The outlook for the kiwi as well as for the Australian dollar remains bullish. This scenario looks possibly only if the US dollar is weak. As seen on the chart, the pair was fluctuating in a wide range of 0.6256 and 0.6318, gradually rising higher. And that's all for now. Hit the subscribe button and stay up to date with the latest market news. See you soon.